Hi, it's Ben from Hannells and I'm back again with Joe, one of our expert in-house mortgage advisors. And today we thought we'd talk a little bit about some of the coverage that mortgages have been getting in the press recently, what's right, what's wrong, and what should you be doing, particularly if you're coming to the end of one of your current mortgage terms. So Joe, I think it's best, because it can get quite confusing with all the different types of mortgages out there, could you give us a bit of a synopsis about the difference between your standard variable rate, your tracker rate, and your fixed rate? Like, what are the main differences between the three main types of mortgages that are available?
Yeah, absolutely. Yeah, so a standard variable rate is a rate that a mortgage lender will set all their other rates from. So they'll go, okay, this is our blanket rate. It's just the rate is like it's a variable rate as it's called, and they can change it at any point. So it can be up, it can be down, and it's what they base all their other rates off. Like I said, it is bog standard. And it does change every month. A fixed rate is fixed for a specific period of time, usually 2, 3, 5 years, sometimes 10 years with some mortgage lenders, and that means your interest rate doesn't change, so your monthly payment doesn't change for that period of time. Good for you if the rates go up, not so good if the rates stay down, because you're on that fixed rate which stays the same regardless. That's right, yeah, that's it. And then you've got the tracker rate, which actually tracks the Bank of England base rate. And like, you remember at school running parallel, you remember parallel lines, that's exactly what it does. It runs parallel, so it's usually like 1% or 2% above what the Bank of England base rate is, and it mirrors it, so it does track it. So 1 minute it could be up, the next minute it could be down. Obviously, as we know, it's up and keeps going up at the moment. So tracker rate, it's not for everyone.
So one of the things I've heard in the media recently, which got some pushback from the financial industry, was a statement that said all of these types of mortgages are linked to the Bank of England base rate, which we know has recently gone up. And there was pushback saying, well, no, that's not exactly true. But from my understanding, if the Bank of England base rate goes up, that is going to have an impact on all of those types of mortgage, not just the tracker that tracks the base rate, but the fixed rate and the standard variable rate mortgage. What's your thoughts on that?
So the Bank of England base rate, it does influence interest rates. So new fixed rates coming to the market, it does influence them, because they will increase their rates accordingly. And staying with the standard variable, it's not linked though. So the only one that is linked is the tracker rate, which does track it. But mortgage lenders, if the interest rate from the Bank of England does go up, traditionally they will look to increase their prices accordingly. And similarly, when it decreases, they will decrease in accordance with the Bank of England base rate going down. Like we saw post COVID, the bank rate was right down at the bottom, wasn't it? And loads of fixed rates were like 1%, which was something great for those people who were getting interest rates at that time.
Okay, so I understand from that the tracker is directly linked to the Bank of England base rate, the other two are influenced, which I think was a good way of describing it. Now let's say that I'm coming to the end of my own fixed term and I'm thinking, well, first of all, how do I know? Like, will the lender tell me I'm coming to the end of my fixed term? Will my advisor that I work with to sign up for the mortgage tell me? Or is the onus on me to find out when my own fixed term is, so I can make a conscious decision with regards to what type of mortgage I'm taking out next?
So if you took it out through a mortgage advisor, what they'll usually do is 6 months before you're due to remortgage or the end of your fixed rate, they'll get in contact. If they're any good, they'll get in contact and go, oh, by the way, Ben, you're due to remortgage. It's always worth pulling out your documents and going, right, when am I due to remortgage? Just so you know in your own mind.
Yeah, especially with the last 2 and 5 years, they've gone past pretty quickly. A lot of people might be surprised as to how soon their term is actually coming up.
Yeah, that's exactly right. Yeah, it sneaks up on you. A lot of mortgage lenders now do have a login, so you can go online and log in and find out from there. So it's always worth finding that out. But yeah, usually your mortgage advisor will get in contact with you and start the process for a remortgage.
Okay, so I've had a call from my advisor Joe, because he's on the ball. He's told me that my fixed term is coming to an end. We've talked about the different types of mortgages that are available. Given the current climate and what we're hearing about mortgages and interest rates in the press, is there one in particular that you're recommending to clients at the moment?
Yeah, so your mortgage advisor sounds a great guy, to be honest. He's on the ball, which is really good. So, there's no blanket advice, which is really important to stress to people. Your shirts are probably a large. It's not going to fit me. So it's not one shoe fits all or one shirt fits all. It's all individual advice. So what's good for you isn't good for me as a mortgage, and so it's not good for a neighbour. It is individual. So if you need to sit down with your advisor and go through the option that suits you. For example, fixed rates. There's no point taking a 5-year fixed rate if you're looking at moving house in the next 2 years. So it's about getting the right advice for you. For example, tracker rates are good for some people, but they're not good for everyone. They are variable, so the prices do go up and down with the Bank of England base rate rises and falling. So if you've got a lot of disposable income, that might be good for you, but it might not. It won't be good for me. I'd like to know exactly what I'm paying per month. So I can't stress enough, it's so important to sit down with an advisor and go through your own individuality, your own individual needs.
Yeah, and what you've said there about then not being a one-size-fits-all solution, especially when it comes to mortgages, is sometimes where the media can go wrong, because they make a statement, everybody assume it applies to them, but that's not necessarily the case.
That's exactly right, yeah. There's so many different mortgage types, there's so many different types of buyers out there. Like, one bit of advice is not right, it's not good. It would put me out of a job, wouldn't it? Like, if you just say, right, this is it for everyone, I'd be a terrible mortgage advisor. So, there are so many different products out there, thousands of mortgage types and thousands of different clients, different buyers. So, yeah, a blanket statement is very dangerous and could cost a lot of people a lot of money in the long run.
Okay, so we've talked about different types of mortgages, what might be best, and the fact that there's not a one-size-fits-all, but I might put you a bit on the spot with this question. Let's say I'm going to take out a fixed rate mortgage. In the current circumstances, what should I be looking to do? 2-year or 5-year?
Yeah, so there's no wrong or right answer.
I knew you was going to say that.
It's individual needs. So, there's no point giving you a 5-year fixed rate if you're going to be moving in the next 2-3 years, because you're going to get what's called an early repayment charge, which we'll cover on another video. But yeah, it's individual. If you're staying there long term, we can't predict what interest rates are going to do. It's about the here and now. So we'll be looking at your individual needs.
Okay, thanks Joe. Well, I think the main takeaway from that conversation is, first of all, find out when you're coming to the end of your fixed rate mortgage. Get in touch with your advisor. If not, speak to somebody like Joe who can point you in the right directions. If you've got concerns or if you've got any questions related to mortgages, get in touch with us here at Hannells, and Joe or one of our expert in-house mortgage advisors are here to help answer any questions. Drop a comment below, send us a message, or you can email us at inquiries@hannells.co.uk. As always, Joe, thanks for joining me on a Friday afternoon. Thanks for watching, and we'll see you on the next one.